Hello traders, hello everyone. Welcome to our new live session. Hope everyone is doing well. TGIF. So finally, end of the week is here. We haven't seen. Hello traders, hello everyone. Welcome to our new live. Okay, we haven't seen that much of volatility compared to the past week, but still, I think that we have to respect and to realize that we are in the middle of summer, and obviously the markets could slow down a bit. So I will walk you through some of the major markets that we normally follow here in our webinar, and we will begin in a second. Okay. But before we start, just please, if you're watching this on YouTube, let me know in our chat box if everything is fine. Can you see the screen? Can you hear my voice? Is everything good or no? And same thing with TradingView, of course. Okay, so looks like everything is fine. So hello, Tom Sukimon. I hope I read this correct. Julius, Oleg, as always, is with us. Uh, Even Nick trades. I see that Nick was here as well, so my pleasure. Okay, just a second. We are just waiting for someone to pop up here on TradingView as well, if sound is there. Okay. Joseph, hey Joseph. Grega, thanks for last live stream advice. The 50 simple moving average really helped. Yeah, I mean, I usually look for this, especially when you have some massive move. Beyond this 50 period moving average, I pay a lot of attention to daily and 4 hour time frames, because then I'm seeing this as a ongoing trend, and the 50 simple moving average can act as potential resistance in downtrend or support in uptrend. So that's some kind of my bull bear line, if I can call it like that. Okay, not always the case, but I try to use it in combination with the Elliott waves principle. So if someone is interested in this topic, then make sure to check our past webinar. Okay, my team member is saying that something is loading for too long, but looks like that now we are okay. Okay, so before I go to some, I will definitely try to be very slow, because I'm not sure why TradingView to YouTube stream looks like it's lagging a bit. So I will try to switch the charts very slow, and hope that everything will go smoothly. Okay, so firstly, before I go to some of the wave counts, I want to look at this overlay chart. So here at the top we have the S&P 500. In the middle we have dollar index, and then I have some of the major currency pairs. And as you can see, we are here in the middle. A dollar index is making some very nice recovery. Okay, now the question is, will this recovery stay in play? Okay, we will see maybe even higher prices, or maybe is this only a temporary corrective pullback? And why I'm looking at this chart is because if dollar index will maybe suddenly remain in uptrend, let's say that rally will resume higher, then with this I can somehow help myself which pairs I should trade if dollar will stay strong. And if dollar will stay strong, I definitely would pay more attention to cable, because you can see that pound dollar is the weakest while dollar index is rallied. If on the opposite side, let's say the dollar index will hit resistance and that we will resume higher degree downtrend, then of course my focus will be on cat and NOK because these two are the strongest. Okay, they are holding very well, not that bearish compared to some of the other currencies like pound, kiwi, and Aussie. Okay, so of course stocks we're seeing in a pull are now in some kind of a pullback, and that is also one of the reasons why dollar is trading higher. Maybe we'll see a consolidation till next Fed decision. I think it's July 26th, if I'm not mistaken. So I think that till then, maybe there will be some challenging intraday trades, because keep in mind that also we are in the middle of summer. We have, despite the summer conditions, there were pretty interesting volatility 2 weeks back when inflation in the US came down to 3%. So I think that we have to respect that markets will not move into straight line. There will be ups and downs. And if dollar index today, which is by the way Friday, final day of the week, the most important price will be the closing price today. If today, let's say, dollar index will stay around current levels or maybe even move towards 101.90 or so, I think that we have to respect that maybe dollar has temporary bottomed. And then this will, so today's close, if we see some kind of a volatility today, today's close could tell us a lot about the upcoming week. Okay, if dollar will stay here or even higher, I think that these corrective cycles could resume into the next week. If suddenly, let's say, dollar index would fall towards the end of the day, then I think the dollar weakness will be back in play, and that's when NOK and CAT could resume much higher and would be probably on my primary list, especially NOK, if that would really be the case. So the importance once again will be where we will finish today. Okay, because of this bounce, as I also mentioned on Twitter earlier today, because of this rally on dollar index and multiple wave counts possible, I think it's maybe not a bad idea to step away from potential trades and just wait on market to decide whenever it wants to move to the downside, or maybe will resume in even higher. So keep in mind what I said. If dollar index will see more upside today or close here, then I think that we go even higher next week, and my attention would be on shorting cable. If we will see a reversal, then I would be probably looking to buy NOK versus US dollar. Now let's go to dollar index. Okay, so can you see chart of dollar index? Okay, so dollar index, the first and the primary wave count, as you know, for the last few months has been that this was a 5-wave drop from 2022 highs, and this was a sideways price action, potentially flat. And if that's the case, then we are now in the middle of this, or not in the middle, but at the starting point of the higher degree wave 3. So much more weakness could be seen. So why I said earlier that today is a very important day, very important week, will be defined by the closing price, is because the price has retraced back towards this resistance level. So that was the previous low here at 100.70, around 100.80, around there. And also that was a swing low here, a little bit higher from May of last year. So if this downtrend is really going to resume, then this resistance must hold. Okay, that's why I said if, let's say, we close here or even higher, it means that this resistance did not hold. It means that we most likely then have a bottom in place. So for now, I don't know what will happen here. I'm waiting on market to decide in which direction we will go. So keep in mind that for now, primary trend is still to the downside. But if we see more upside, even overlap with this wave 1 here around to 101.90, I believe, then obviously something is changing. So in such case, I would put this wave count in play. Okay, and this wave count, in my opinion, it's a pretty clear. I really love the wave structure of it, and especially from a psychological or sentiment perspective. Keep in mind that after this very strong drop, which occurred, by the way, after the CPI data, a lot of traders, again, are looking for more dollar weakness because everyone is convinced that Fed is very close to end its hawkish cycle, but they're still away from their 2% target for inflation, right? So maybe we'll get some kind of a surprise. Definitely there was overcrowded trade here over the last 2 weeks. So if suddenly, let's say, we rally back towards 101.90 or so, I think that actually this rise would not be a surprise for me, especially from a sentiment perspective, because if something was overcrowded down here, then we know that maybe really this unexpected free wave rise could kick in. And again, we are, as I said earlier, in the middle of summer. Okay, so trading conditions could be very tight here. And if we will stay here above 101 or even higher, this range that was in place since start of the year almost, okay, will keep going. So in such case, we will have to be a little bit more patient before this downtrend could resume. And I know that if this count would will come in play, the trading conditions will be very tricky because corrections, as you know, are not that clear. Sometimes will not be even made by free waves, and in such case, trading even some majors could be very difficult. It would be much easier to catch the trade if we'll just keep moving to the downside within a higher degree wave free that I showed on the earlier chart. So once again, the important is where we will close today. Okay, I hope that we will get some action during the US session now, which could define the next dollar move for the next week. Okay, so that's for dollar index in general. I don't want to be smart here telling you in which direction we go because I don't know. I have two wave counts and I want the market to decide at these near-term levels. Okay, and whenever this happens, I think that we will have potential very good opportunities on other pairs. As I said, potentially maybe even on cable. So since I mentioned cable a few times, let's take a look. Okay, so before maybe we go to cable, let me show you this chart. Okay, that's the COT data. I will wait a little bit. I'm not sure. I'm not really sure if you are already seeing this one. I just want to wait a little bit so to make sure that everything is fine. And by the way, when the charts are loading, please, if you're not our subscriber here on YouTube or either on TradingView, make sure to subscribe to our channel, leave us a commentary, press a like, and with that kind of approach, you will definitely help us to grow. And I will make sure to make more of those webinars in the future. So make sure to subscribe and click a like button, please. Okay, so what is this? Well, this is the COT data, okay? And I have only green line here, which represents positioning of large speculators. And notice that we are moving into some very interesting extremes here, right? Especially when you look at the data back from 2011, okay? So each time when we reach these extremes, what happened? Well, cable found resistance. It happened here in 2011, 2012, then again 2014, then again in 2018, and now again we are here. Okay, so we definitely must be aware that there can be some reversal or limited upside. From a longer term perspective, I'm bullish on cable. I think that multi-year low has been reached here, but I would not be surprised if we see some major pullback. So looking at the cable here, firstly on the wave counts, the higher degree, notice that we recently came very nicely to the upside after that spike here in September of 2022, which, by the way, was a retest of the low going back from 1985. Okay, so 1985 level has been spiked out. And what happened here in September was, if you remember, there was a massive capitulation of pound. There were a lot of pessimism going on, and that's typical and normal for how to end the bearish cycle. Okay, so back then I remember this very well. We were tracking this very closely, and I've been saying, especially after prices spiked down and stabilized in a few days, that we will most likely continue higher. And what we are seeing so far is a very nice bounce in the into the other side of this potential wedge formation. So we are now at the upper side of the wedge. We came pretty far so far over the last few months. So maybe there can be now similar positioning, but on the opposite side. So as I showed on the COT data, maybe we are now at the extreme of this other side. So again, there can be some pullbacks. And from an Elliott wave perspective, I definitely would not be surprised if we either see a pullback from that line down into wave 2, let's say 1.2 could be support, or if we breach this trend line, then we see a pullback, and this red trend line would then be as a potential support after it's broken. But for now, it's not broken yet. So I'm looking for this potential pullback to play out, maybe still this year. But maybe in the short term, yes, there can be, who knows, another retest of the highs. Because if I look here on a daily chart, you can see that I'm tracking an impulse. So we are in a fifth wave. I'm not really sure if fifth wave has ended here, okay? Or maybe we will see another retest of the higher resistance levels of this monthly trend line, which is, by the way, here as well on a daily chart. So if, let's say, we drop back towards 1.2680, I think we have a top in place. In such case, I would most likely look for something like this. Okay, maybe I will adjust the wave counts a little bit. I'm not really sure, but clearly that's also one possibility here. Okay, that fifth wave is already finished, but I don't want to make any kind of a big calls here. Okay, let's say that we are still in a corrective formation, but what's good about that is that even if we are in a correction in a wave 4, what we should see, if you know the Elliott wave principle, okay, then you know what's the difference between impulses and corrections. Impulses are strong and structured by 5 waves. Corrections are structured by 3 waves. And what's good thing is that even if you see first part of a correction in 5 waves, it still tells you in which direction market should go. It should move to the downside, right? Because that drop, the substructure of this wave A, is in 5 waves. So if you bring on your Elliott wave book and look at the substructures on the theory, you will see that even if this would be a correction, you have to see 5 waves down here, 3 waves up for a wave B, and then more weakness. So I think that even if the whole drop from 131 would be a wave 4, meaning that we somehow hold or stay above the invalidation level, we still need more weakness before this wave 4 can be finished. Okay, or maybe that was an ending diagonal and we are headed straight to the downside. So no matter how I look at it, I think that pound is headed to the downside. So the inflation figures definitely was the main catalyst for this to happen, right, in the UK, because everyone was looking at these inflation figures in the UK, which was extremely high. So finally in the UK is now also coming to the downside, and inflation in the UK is lagging compared to other countries, but meaning it has a lot more to do to approach the similar inflation figures in other countries. So in other words, currency pair can also have a lot of room to move to the downside then, if inflation will keep improving over the next few months, right? So I think the more weakness here could be seen. As I said, that's an impulse to the downside. I think it's a 5-wave drop, and I'm looking here at this wave count. That's our primary wave count. So I'm looking this to be a 5-wave drop with an extended in a wave 3. Okay, so I will be expecting more weakness after this rally. But again, it depends where dollar index will obviously close. Okay, that's also very, very important. So I think that so far, because we have seen a pretty aggressive drop, also maybe check or pay attention to candlestick formations. I normally will follow or look the candlestick formation whenever see such a strong wick like this one. So if you just ignore the substructure and you just pay attention to this maybe daily candlesticks, you can clearly see a very strong reversal, right? So I think that that's an impulse. Look at the weekly candle. Okay, so if you think that that's a weekly candle that we will maybe not just complete correction here and move straight to the upside, well, yes, it's possible, but less probable. Okay, because I think that when I look and make a combination of both weekly candlesticks and potential COT data, that very big important monthly trend line and 5 waves down that we can count on intraday chart, I think that there is a higher probability that we will continue to the downside. But it depends where we will close, of course. That weekly candle is still in the making. Okay, so if we suddenly, let's say, we pull back to 1.2970 by the end of the day, of course, this would not be bearish as it at this time. Okay, so it's very important when we close and very important what the dollar will show us. If dollar index again will keep moving higher, I think that shorting cable, especially after rallies next week, could be one of the trade to look for. Okay, so that's for pound. I hope that this was clear enough. It was not. I hope it was not too complicated. I will do my best to present you how I look at the markets. So that's for cable. Now let's take a look also on Aussie dollar. Okay, so commodity currencies are very weak. I mean, Aussie really cannot pick up. We have seen some recovery recently, but China economy in China is still not improving. So GDP was down recently. So I think that that's one of the reasons why Aussie is also having some hard times here. And keep in mind that economy in China cannot pick up itself. Okay, if you have, because China is obviously is linked to the rest of the world, and if the rest of the world has high rates, it means that cash is expensive. It means that there will be less orders coming from China. Okay, so obviously this everything is linked. I think that China will move to the upside much easier when we have when the rest of the world also have lower rates. Okay, so that's why the China is not picking up yet. But I still think that maybe this could change over the maybe later this year or maybe in 2024. Now, if we look here at some of the wave counts, well, we are still trading above this trend line. By the way, this trend line turned into very nice support here back at the start of the month, and we recovered. But really, market wasn't been able to clear this 69 resistance. So it looks like that we are now falling back into the consolidation here. And I actually just before I start the webinar, let me just clear this out. Something is wrong here. Okay, just before. Okay, something is not right here. Okay, so here we have potential alternate count. So I will show you. That can be 5 waves up. Okay, you have ABC down. And now you have potentially another ABC down unfolding, okay, in this wave too. Okay, so this one, I think if dollar again will stay bullish today, or in other words, if Aussie will stay here or even lower, I think that watch out for deeper wave, see a retest of this level 65.90 next week, and then let's see what happens down there. Okay, but for now it looks like that we are in the middle of the range. Even if you just, I mean, let me delete this. Okay, try to ignore the wave counts. You can see that actually we haven't gone anywhere lately. We are falling back into the middle of this range. So clearly we are not trading impulsively here just yet. It could be the beginning of something big, but so far it's not happening. So it's worth to be very careful here and not be too smart with the next potential move. I definitely will stay away from Aussie because I just think it's not that clear at the moment. But from a longer term perspective, I think that this low here in October 2022 was the low for Aussie, and that we will continue higher. But as I said earlier, China has to see some move to the upside as well. And here I have the Hang Seng Index. looks like that there can be some very nice head and shoulders formation here. So this can be left shoulder, head, right shoulder, very nice supports right now. So potentially we could be seeing more gains, but maybe even retest of these May June levels is still probable. But overall, I think that whenever this one will start picking up, I think that Aussie will benefit from that. Okay, so from a longer term perspective, let's say for next year, 2 years, 3 years, I think that Hang Seng Index could be trading much higher. Okay, now let's take a look also on. Let me check my notes. Kiwi. By the way, if you just joined our webinars, please press a like, leave us a comment here on TradingView or maybe on YouTube, or subscribe to our channel, please. Okay. So, what's going on with Kiwi? Well, Kiwi is coming to the downside pretty hard. We haven't really seen much of a stable price action here above that line. Kiwi, however, has been doing very well at the end of June, start of July. It was one of the strongest, and also China back then announced that they are in trade talks with New Zealand. So maybe that was one of the trigger for a recovery. But now this market is coming back to the downside. I was looking for a minimum target towards 6.3, and we actually have seen even higher prices, but now we are coming back to the downside. And notice that this was clearly a free wave move. So I'm afraid that something more complex here can be in the cards. Okay, so again, commodity currencies at this stage are not looking good. Okay, maybe again this will be playing out for potential deeper wave C, or we will just stay sideways trapped in the range. So again, looking at Aussie or New Zealand versus US dollar, I just will try to avoid them until I see some clear price action. Definitely want to see moves out of these ranges. We are actually at some kind of a pivot level of this recent consolidation. So now when we have Aussie and Kiwi doing the same, let's take a look on maybe Aussie versus Kiwi. Okay, maybe we'll get some price action there. We will see, but I think that we have but I think that we have some very nice ongoing consolidation here as well. Okay, so notice that from that 2022 highs, there was a 5-wave drop, and now we are in consolidation. Okay, so consolidation because of a higher swing low here and lower swing high here back in June. I'm looking for potential triangle. Okay, but triangle are A, B, C, D, E patterns. So even if it's a triangle ongoing, we should see more weakness at some point, but unfortunately this triangle is still incomplete. But if you're maybe like a intraday short-term trader, still this could be interesting in the near future, because we either can be completing sub-wave B of D. Okay, keep in mind that each sub-wave of a triangle should be corrective, okay, meaning in 3 waves. So this could be wave A, B, and you would be expecting more weakness into wave C, or maybe that's already waves D and T, and you will see straight move to the downside. So again, I think that there is strong resistance at 1.1070 or 90, and at these levels, as long as this level holds, we could expect a new resumption lower. Looking at the intraday substructure here, that can be a leading diagonal here, okay, for wave A, and we are rallying for wave A, so of wave B. Okay, so watch out for more maybe short near-term strength, but after these 3 waves rally, there can be a new sell-off coming. Okay, so I think that, as I said earlier, as long as we are below that recent June swing highs, I think that there can be resistance, but there's still some price action that should unfold first, right? But looks like that Kiwi in general could do much better whenever those commodity currencies will try to pick up, because both, as I said earlier, Aussie and Kiwi made important lows in 2022, and at the same time this pair has made high here. Okay, so looks like that even if Aussie and Kiwi will do both will do well versus US dollar, I think that this downtrend will resume. So maybe Kiwi will be much better. Okay. Uh, Now let's take a look on dollar yen. We have seen a very nice volatile price action on dollar yen, and I think that that was obviously we got inflation data, and we had some comments from BOG. So they're still looking for yield curve control. There was no mention, or at least I didn't notice it, about the potential intervention, which makes sense because, as you know, dollar yen after all has seen pretty nice drop here. So up here there was plenty of talks about potential and speculations on intervention. Then we have seen a sell-off. Now this everything is quiet. Okay, so obviously market that came down, it was help from it was the reason the inflation data obviously in the US. Okay, so but closer we go to these highs or maybe even 150, there will be a new speculation that intervention is not far away, and again there will be sellers trying to show up. Now from an Elliott wave perspective, I still think that ABC formation here could be finished and that we could be now only in a wave 2 rally. So looking at these wave counts here, let me just update them for you. Okay, so I think that this could be a wave 2 rally. So we have seen the first resistance here. It was a triangle pivot, by the way. If you look back here around 140, then was 141, and we are not far away from that level. But more importantly, there is a 61.8%. So again, as I said earlier, the important is where the dollar will close. If dollar yen will finish here or maybe even higher, it could be a little bit tricky to say that we are coming to an end with this wave 2. But if we see suddenly, let's say, the next few sessions drop back towards 140, then I think that more weakness could be seen. But from a clear textbook perspective, this definitely looks very, very interesting and attractive. So I think that more weakness after all here could be coming. So if dollar index would come to the downside, also watch out for dollar yen. Okay. If dollar index will keep pushing higher, then maybe just wait and put dollar yen on the sideline for a moment. Now what I have here, gold. Okay, so gold, as you know, we have been discussing about the bullish view on, or at least temporary recovery on gold, because we had a pretty important price action here in through June. So firstly, there was a move out of a triangle. We know that moves out of a triangle are final in a sequence. And then we had this move not been in 5 waves as an impulse, but as a motive wave. It was actually an ending diagonal. Okay, so we had 2 important evidences why the market could be potentially approaching support 1900, as I've been repeating this several times in June. So again, it was finished triangle, move out of a triangle is final. Normally a lot of traders will try to join the downtrend, but normally it's too late, especially if you look back from where we came. And because it was ending diagonal. Ending diagonal is also very overlapping, very slow. It will try to confuse traders because market will not be very directional, but momentum will try to peak at some point, and whenever this happens, price will move in the opposite direction, and only a few traders will really be able to catch the move. Also back then, if you recall, we were looking for head and shoulders bottom formation here, and 1935 was important breakout here for gold, and we were looking for these 1975 1985 levels, which was the swing high going here from June. So for now, I still think that there is a chance for more upside, especially if dollar will really stop at some near-term resistance. I think that gold could see more upside and that you are now in a wave 4. So very attractive support could be at around 1950, but my focus would not be on gold. Okay, it would probably be more on silver. And silver, because gold silver ratio has recently moved to the downside. Okay, so when this is in a bearish sequence, I think that actually metals are in uptrend. And notice that here, after this three-wave rise, okay, we haven't revisited yet these May levels. So I still think that's possible to happen here. Okay, so if in the near term we see more weakness, I think that there is opportunity on metals. But as I said, my focus would most likely be on silver. So I will be watching silver closely next week. Also, what I like about the silver is that it's doing quite well. It's holding up important levels despite dollar index recovering. Okay, we haven't seen any aggressive sell-off like maybe on some of the commodity currencies. So here, notice that we are still holding this 2450, which by the way is a very important level. So I think that wave 4 could be really has some nice support here. Then a little bit lower you have the 38.2% that you should definitely pay attention on. So hold these levels here from 2430 to 2450 is, in my opinion, very attractive potential support. Okay, but for now that's only one leg from the highs. You need three waves down, three subwaves here within this wave 4. So watch out for more strength here on silver, and I definitely will have a close eye on this one for potential longs. If we drop, of course, invalidation level is here at 2330 because wave 4 must not step into territory of a wave 1 or wave 2 if you want. But already a drop below 2380 or so would be the first indication that maybe something is changing. Okay, but definitely this is very, very interesting and attractive support here. So silver also on my watch list. Now let's take a look also on crude oil. Okay, so crude oil has recently stepped out of this downward channel. Look closely here. Okay, so we could see more upside here, more strength into wave B. Normally when the when the 5-wave drop is finished, you can expect that maybe market will retrace all the way back to the former wave 4, which is around 2380. So that's the first resistance. So I think that there is still room for some upside. Looking at more of an intraday structure, what I like is that we have seen a pretty nice and strong recovery, okay, from end of June, and notice that crude oil is now moving sideways despite the dollar recovering. So now imagine what may happen with crude oil if maybe dollar will hit resistance, or maybe just to make a minor drop. Then I think that crude oil could see more upside. So that's why I said earlier that I also like dollar NOK for potential shorts, because NOK is also doing very well. It's one of the strongest within this pullback on dollar index, compared, of course, if you compare NOK to other major currencies. So I think that the dollar NOK here can be also very attractive on the short side. If you look here on a daily chart first, just let me load the charts. Okay, so here you can see a massive breakdown below this, out of this Elliott wave channel. Okay, more importantly, that was a very strong drop here over the last 2 weeks or so. So if crude oil is consolidating and we'll see push to the upside, I think that this market will also see even more weakness. Okay, so I think that there's worth to keep an eye on dollar NOK for potential shorts, as long the market is trading here below 10.47, 10.50. I think there is a chance for more weakness here into this wave 5 of an extended wave 3. Don't get confused by different wave degree levels. Okay, so that's ongoing black wave 3 still, which is, by the way, this one here from a daily. Okay, so crude oil, more upside in crude oil from current consolidation equals to more weakness on dollar NOK. But again, it's Friday. I'm just not interested to look for any kind of a trades on Friday, but definitely next week. By the way, starting next week, I will be on a vacation, but my laptop is always with me, so I'm pretty sure that a lot of you are doing the same. So I will have my eye on the markets and definitely will pop in our chat room or on Twitter as well whenever we get some interesting developments. Okay, now what I have here, S&P 500. Let's take a look. Okay, so as I said already earlier, there is a pretty nice ongoing bull run on stocks. We think that more upside will be seen, but of course there will be consolidation. Maybe a new one is not that far away. We are tracking wave 5 of an extended wave 3. Okay, so here we have this extended wave 3 going on from May lows. Okay, and as you know, even wave 5 should be structured by 5 subwaves. And looking at the prices from end of June, actually from 43.60, I think that there's still room for more gains. Nice support could be the short term at 45.30. Okay, drop below 44.95, which by the way was a very strong resistance firstly here back from mid of June. So if we drop back below that level, then most likely we are going to see a higher degree wave 4. But if you're looking for trades here or to join this uptrend, I would prefer to wait. Firstly, we have a Fed next week, and then maybe just wait on a higher degree pullback. Okay, I'm not fan of buying this market that high. Okay, definitely it's worth to wait on a pullback. So looking here maybe on a daily chart, keep in mind that the VIX is also still at the lows, so market is fine, confident about potential further rise here, and that's why maybe we should be just aware that maybe higher degree correction here in wave 4 could kick in. Also, we have seen some major stocks turning to the downside recently. Tesla also has seen a massive reversal. There was some spike, I believe, on Apple, if I'm not mistaken. So if these major stocks, because of earnings, obviously will see some reversals, then of course this will be also visible on indexes. There is some resistance here going back to, let's go back to March of 2022. Okay, but definitely an ongoing uptrend. Now let's take a look also on DAX. So German DAX, here also very nice ongoing strength over the last what, week, 2 weeks or so. Notice that no matter what's this wave count, okay, going back here, just let me load the charts here. Not sure why this is so slow. Okay, so no matter what's the higher degree labelings, the important is that from the all-time highs, there was a free wave setback. So I'm sure that you want to stay with this trend. Not only that, we have very nice 5 waves up above that trend line resistance, okay, out of this corrective channel. So I think that more upside could be seen. We also shared this on our Twitter, I believe, and on TradingView as well, I think. And we had these 5 waves up right into this resistance. We even called a spike here, and now we are turning back. So I think that yes, there is an ongoing uptrend, but if you want to join this trend, maybe again just wait on a deeper pullback first. So 38.2% would be the first fib support that I would pay attention on. Okay, because normally when I look for higher degree corrections like maybe wave B or wave 2, I want to see, it's not always the case, especially when the first leg is extended and strong like this one, but that's normally my minimum objective, okay, because much easier is also then to make the proper risk reward trades whenever you see a free wave movement into that levels. Now let's take a look onto the final market, which actually will be the Ethereum. Why is time go so fast, man? 45 minutes. I can't believe this. Okay, so on the Ethereum, why I picked Ethereum? Because maybe there will be alt season going on, especially after Ripple won this case against Security and Exchange Commission, right? So maybe there will be uh, more traders starting trading again altcoins, because especially those who are not, that are not listed as a securities. And also, if I look here at the price action, just from pure rate wave perspective, I think it has a pretty nice straightforward wave count. Drop from the recent highs has been in 3 waves, rise in 5 waves, the broken channel. So these are two very important indications for resumption of an uptrend, because the previously from start of the year there is an uptrend. Then you have this ABC now formation going on. It's a flat, and keep in mind that there was a lot of buyers probably going on last week. Okay, after this Ripple news. But whenever you're looking for potential breakout on cryptos, I suggest to be more patient. It's not the same like any other market. It's much more volatile. So maybe just one day of a breakout above your breakout point, maybe it's not enough to call it a breakout. Just wait maybe for something more stable above your breakout point, like 1 2 3 days. It will be a totally different story and still more bullish if we would stay above that level through the weekend. But notice that then we just simply into the Friday close, on the other markets we have seen a reversal to the downside, and now we are keep consolidating. So I think that we are now headed for the lower side of the range. I still think that 1800 is very interesting, very attractive support. So actually anywhere between 1800 1850 is a good level for potential bounce to the upside. Also, if I just delete this, you can potentially see some kind of a head and shoulders formation going on. Okay, this could be neckline, left shoulder, head, right shoulder. Okay, so again, it could be interesting for a recovery. So I'm definitely bullish on the Ethereum. We'll be expecting more upside. Also, we'll pay a close eye on these levels when we approach them for potential longs. 1625 is definitely in the invalidation level, right? Okay, traders, I saw that you had some questions, but unfortunately I'm running out of time. I will try to maybe to answer in the chat boxes, or if you contact me on Twitter a little bit later. Also, again, thank you for attending. Thank you for watching our webinars. Again, try to support us, leave us a like, press a comment. Press a like, leave us a comment, and hope to see you soon. I most likely will not be doing any kind of webinars in the next 2 3 weeks because I will be away. But I surely will post some charts, share some ideas on our free channels, and also definitely here on TradingView as well. So again, traders, have a good day, trade well, be careful. Maybe we'll not go far till Fed next decision. It's also Friday. It's a bit late for potential new trade. So if you didn't make money till now, don't force it into the final session of the week. Be patient and have a good time during the weekend. Enjoy. Bye.